Hey everyone, thanks for jumping back into the cryptoverse. Today we're going to be talking about Bitcoin and the risk metric. So if you guys like this content, please subscribe to the channel, turn your notifications on, and also join the Telegram channel, which you can find a link to in the description below. And it's also this up here in the upper right hand corner of your screen. So if you're unfamiliar with the risk metric, it is something I published myself. This is what I use to dynamically dollar cost average in and out of the market. So basically the idea is when the risk level is between 0 to whatever your risk tolerance is, minus 0.5, then you are dynamically dollar cost averaging your way into the market. When it's between 0.5 and 1, that means you're dynamically dollar cost averaging your way out of the market. So it helps reduce your exposure when the price of Bitcoin starts to go parabolic. But it does so that it weights your sells higher at the top, and it also weights your buys at the bottom. So let's go ahead and jump in. So again, we're looking at the price of Bitcoin on the primary y-axis. This is a logarithmic scale, so note that each move from each major tick to each other major tick is 10x. So just let that settle in if you're unfamiliar with a logarithmic scale. And on on the x-axis we have time, and then it's color coded based off the risk metric, which it's not currently published or anything, but there is access to it if you become a premium subscriber. So I want to go ahead and look to see what's transpired over the last few weeks. The last video on the risk metric was, I think, a little over a month ago. So let's go ahead and update ourselves as to what has happened since then. So you can see that we have this move in the price of Bitcoin where we went back to that dark blue regime, the ever coveted regime that hardly ever comes up. When it does come, most people are too scared to buy. But historically speaking, the people that buy in that regime, that dark blue regime, which is getting close, it's between 0 to 0.2, the people that are buying in that regime, historically speaking, have been rewarded quite well. And that's also been the case in our current cycle as well, buying over here at around 3,100, and then the price went up around 4x over the next 6 months or so. And then on March 13th, buying at around 3,800, and then the price going back up to over 9,000. So it's one of those things, if you're familiar with the cryptocurrency markets, then emotions are not the way you should be handling your cryptocurrency investments. This is not financial advice by any means, but this is how I handle my own investments in cryptocurrency. So I did my PhD in engineering, and I'm basically trying to apply some of the stuff I learned there to help better understand how cryptocurrency works and to stick to a plan no matter what happens. So when you see the price dropping and you can see the associated risk is dropping, then this means you stick to your plan. It doesn't mean you capitulate here at the bottom like some of you probably did. It means that when that happens, you're actually moving against the herd. What the herd is doing typically in these scenarios is completely wrong. So by having a plan up front, it can help you if you stick to it for years and years and years. So if you haven't seen the prior videos on this, I would urge you to go do so. I think it'll help clear some of the things up. But let's go ahead and continue to dive in here. The idea is that when we're at a speculative bubble peak, so when the price is soaring, going parabolic, it's going to flash the sell signal. Now, one of the issues that we've talked about many times on this channel is the idea of lengthening cycles and diminishing returns. So if you don't have this built into the model, then how could it ever give you an appropriate sell point? Because it's going to assume that the price of Bitcoin could go up, 100, 1,000x or something in the short term, which is most likely never going to happen again. You can see the price here went from a few dollars all the way up to over $1,000 in a couple years. I don't expect to see an ROI that significant. Therefore, it's built into the model that we would expect diminishing returns as well as a lengthening cycle. This will help us identify where the speculative bubble peak is, where the top is, within some tolerance, But what's a few 10K among friends? I mean, if we're all purchasing here in these levels of between say 3,000 up to 10,000, then if and when Bitcoin goes off to six figures in the next few years, then what happens right now is irrelevant. The years 2019, 2020, and probably even part of 2021, I think, are going to be the best accumulation years for Bitcoin for forever at this point. Because in future cycles, so you can imagine the next cycle, let's assume the next bubble is in 2023, the next bear market / accumulation phase is going to last years, and then the ROI at the next market cycle top, let's assume it happens in say 2031 or something, it's going to be reduced. So because of that, I would say that the present time, in a sense, in cryptocurrency is the time of your life, because the cycles are only going to get longer most likely, and the returns are only going to get reduced. So take the opportunity, while you have it in your hand. Don't get bogged down by day-to-day price movements. This is the number one thing you can't worry about. So this is the idea. I think I basically explained the premise of this metric. So let's go ahead and again, I like to take the color-coded part out of it so you can numerically see. The current risk of Bitcoin is 0.39. So we're basically knocking on the door of 0.4. We're knocking on the door. If you see the price go up to say 93, 9400, we're in the 0.4 to 0.5 risk regime, which for me is the last regime that I personally would be buying Bitcoin in. It's the last regime. And note that the risk associated with a given price will obviously change as we go forward in time, because the metric is based on not only price, but it's based on time. It's based on, as I mentioned, volatility, the idea that we're going to see diminishing returns. So if you look at this metric, you can see that the time that we're below a risk of 0.2 is very limited. It doesn't happen that often, and when it does, it's usually a really good time to be purchasing Bitcoin. And if you follow the premium content that I provide, if you're interested in it, just go to patreon.com/intothecryptoverse. Alternatively, if you would like to subscribe to the channel using cryptocurrency, you can go to my website, intothecryptoverse.com, which actually also accepts fiat as well. But regardless, if you guys want access to this, I do have a Google Sheets document that will basically, it gives you a live updated version of the risk metric for both Bitcoin and Ethereum. And it's, it basically interpolates through the values, gives you the metric. You can even use that metric and call it to some of your, maybe your own external dashboard or something, and use it however you see fit. But the idea, and we're gonna get into it a little bit more in a few minutes, is that you're using this numerical value to remove your emotions from the picture. This is the idea. So when the price of Bitcoin is crashing and the risk is going below 0.2, most people are running for the hills, and they're saying $1,800 Bitcoin. They're saying, Bitcoin's going back to $1,000, or Bitcoin's going to zero. This is, Bitcoin's been around for 10 years. It's been around for more than 10 years. It launched, the Genesis block was January 3rd, 2009. So we have a ton of history in Bitcoin. Bitcoin is king. A lot of people like to talk about, say, utility and all these other things. The truth, the cold hard truth when it comes to cryptocurrency, is that most people don't actually care what the latest and greatest tech stack is. I think there's a place for that. I'm super bullish on coins like Ethereum, and I think the ROI on Ethereum will likely outperform Bitcoin in the next cycle, but there's no guarantee. But ultimately, Bitcoin is king. It's the longest running blockchain that we have. There's more confidence in Bitcoin than any other coin, and it's not constantly changing day to day. And this is what investors are like to see. It's hard for people to keep up with. Okay, you have your coins. Oh, and they switch to this other chain or something. So you got to do this conversion or all these different things. Bitcoin is king, and I think everyone kind of gets to that point at some point, but it takes a while to get there. So again, we're looking at the risk metric of 0.2. we dropped below it when we went down to 3,800. You can see that the risk metric came down to about 0.12 or so, which was, we have the private Telegram channel for the people that subscribe to the premium content, and we were talking about it at the time that we were at a risk level of 0.2, and also that it corresponded with a 300-week moving average. So I think these things are helpful, and it's a decent way to manage the risk of your portfolio. And again, you don't have to use this metric. There's other metrics you could use. This is just the one I use, and it's one of the ones I'm going to stick to throughout the market cycle. In a similar manner, a risk of over 0.9 doesn't stay that way for very long. You can see that we have a 0.9 here, over 0.9, over 0.9 here, and over 0.9 here. So this is what we're going to use to help identify the next speculative bubble peak. Because when you get into this region, this risk regime, this is usually when the dumb money is just pouring in. This is when grandma is asking, how do you buy Bitcoin? All of your friends are thinking you're a genius, and they're saying, okay, you were right, how do I buy? This is when you're selling. This is when the smart money is selling. People are going to be saying Bitcoin's going to 1 million, or Bitcoin's they're going to be making these crazy predictions. But the level-headed investor, the one who was smart enough to get in when we were at these lower prices, when the risk levels were lower, you're going to be taking your due profits that you basically earned by investing in the market when most of the rest of the world was incredibly fearful. So this is the general idea. And for those of you who think this is likely going to happen in 2021, I have news for you. It's probably not going to be 2021. It's more likely to be 2023, plus or minus, say, 6 to 8 months, based on the lengthening cycle theory that I've shown on my channel. So be sure to check that out if you haven't seen it. But this basically gives you the general idea. Now, one of the things that people say is, well, this is all hindsight. Of course you can make a metric that could fit past data to, say, go between 0 and 1, and at the peak it's near 1, and at the bottom it's near 0. But how do you validate that? And it's a decent question, because ultimately you want to be able to use this to help predict the future, rather than just look back at the past and see what could have been. So I showed this before. This is the same chart I made like a long time ago, before that crash we had in March. So it's not on here. You can see it does show us coming down, but it doesn't have that final crash. This basically shows if I were to feed in, say, dummy price data, for what I think the price of Bitcoin is going to do, more or less, over the next, say, 3 years, this is basically what I would expect. I don't anticipate us getting to a $20,000 Bitcoin, most likely at least for another year. Obviously, it's possible that it could happen before that. I certainly did not expect a $14,000 Bitcoin in 2019. I don't think most people did. But the point is it's irrelevant what we think. The math will tell us what to do. The model will tell us what to do. So it's, we can play in the sand all we want and say, okay, well, I think it's going to peak in 2022 or 2021 or 2027, whatever it is. But if you just follow a certain model that you stick to, such as this model between 0 and 1, then it just makes it clear. You take profits at a certain level, and you buy at a certain level, and you just do that, and you don't check the price of Bitcoin every 3 hours. You just check in, maybe once a week, once every month. You look at the risk level, whatever you're using to measure it, and you make your either purchase or sell accordingly. So this is the idea. So I fed in basic price data that I thought might happen, and the only thing I can guarantee you about this is that it'll be wrong, because I don't exactly know what the price will do, but I have it going to just over 6 figures, probably by 2023 or so, and it ultimately flashes red around that time. And this is informative to see, because again, we're seeing a lengthening cycle and diminishing returns. Because here, the price of Bitcoin from peak to peak was around $1,100 to $20,000, but here we're only going from $20,000 to, say, just over $100,000. So there's a pretty significant difference between the ROI, but it does what we want it to do, because it's going to flash that dark red, a risk level of over 0.9 in that region. And the nice thing too is, if you look at the risk, the way it's set up, it front runs it. So it's not a lagging indicator. It doesn't tell you, oh yeah, 3 weeks ago that was the peak. No, it doesn't do that. It tells you instantaneously what's going on. This is the key point that is valuable, because if it were lagging, if the risk metric were shifted over here by a few weeks, then it's probably too late, and you've already seen like a 60% drop or something in the short term. So this is what we want to avoid. So the idea behind this metric, so let's go back to the price data that we have. This is not, we're not extrapolating anything here. This is just the price of Bitcoin, the price corresponding to the primary y-axis on the left, the risk corresponding to the secondary y-axis on the right. You can see here again, we came close to that 0.1 level, but the idea is that you're defining your level of risk. So for me, in these markets, because I don't only invest in cryptocurrency, there's a lot of other markets too, and I can tell you, most people who manage their money in a healthy manner aren't just looking at one asset class and then just sitting on their thumbs for 5 years waiting for something to happen. That's really not a good strategy if that is your strategy. But the idea is to slowly accumulate your portfolio over the next several years. Sell at or near the peak dynamically as we go up the curve, and then when crypto really starts come crashing down, this is the time that you're not just, okay, I'm just going to sit on my money for a few years, wait for the bear market to be over. No, of course not. You're looking into, okay, where else can I put this money so that it can continue to grow? So this is ultimately the idea. So the idea here with the different risk levels is to go between 0 and 1. So for me, a moderate risk taker, it would correspond to buying between 0 to 0.5, and then selling above 0.5 all the way up to 1. And additionally, if it's you're a conservative risk taker, then this would correspond to buying between 0 to 0.4. So maybe you don't like to take on that extra layer of risk. Maybe you're managing a significant amount of money and you're not interested in betting too much essentially on things. And so what you might do is you start selling when we enter this risk regime of 0.4 and higher. This is not necessarily a bad strategy. It at least ensures that you're taking profits. But again, it might negatively impact you in the event that we ultimately go on, say, a run up to a new paradigm shift in the price of Bitcoin. If you sold too much in this region, then that could, it obviously would affect your potential profits. But as long as that's what is in your risk tolerance level, then it's fine. It's just something you say, this, this is my risk tolerance. This is what I can live with, and that's my strategy going forward. And then, of course, we have the aggressive risk taker, which a lot of people are. I know they like to buy up to higher risk levels, maybe 0.6, 0.7. But again, if you even in this event, if you were buying up to a risk of 0.6, then you still would have had a sell triggered in 2019 when the risk was between 0.6 and 0.7. And one question that I get is, well, when do you sell in this risk regime? What I typically do is once we enter the risk regime, I set a stop loss. And then if the price keeps going up, then and then the risk as well, if it keeps going up, then I just move that stop loss up, accordingly. And at some point, we will see a retracement, and then that'll get hit. And if we then drop back down into a lower regime where your risk tolerance is okay to buy, then you can then reinvest the profits that you took. If instead the risk keeps going up, then you continue to sell on the way up, because you admit to yourself that I'm not going to be able to time the top, and I would rather ensure that I take profits to ensure that I have, I'm better off financially tomorrow than I was yesterday. I'm going to do this. This is my strategy, and by implementing this strategy and sticking to it, it's more of in my opinion, it's a much better way than just winging it in a sense. Just saying, I'll just buy for a few years, and then at some point I'll sell the peak, and I'll magically know where that number is. And then again, we've talked about dynamically dollar cost averaging. I'm not going to go too much into this, but essentially it involves weighting your buys, when the risk is lower, and weighting your sells when the risk is higher. This is the general premise to this model. So if you like this idea and you want to see it live so you can get an updated risk metric constantly, then please check out the Patreon channel, which you can find a link to in the description below. It's just patreon.com/intothecryptoverse. Or if you would prefer to pay with cryptocurrency, you can do so at intothecryptoverse.com. Alternatively, if you don't, paying isn't really your thing, then you can just subscribe to the YouTube channel, and I'm sure I'll periodically post updates, but I might not do them at the most timely instances. So just be aware that they'll just come when they come. But if you want instantaneous access, then check out those channels. A couple more things. Sorry about the white on either end here. This just shows the price of Bitcoin versus the risk. So I just kind of wanted to show you this pattern. I've showed it before, but the idea is as the risk goes up in a market cycle, and then the price and risk go down, and then ultimately we curl around and have this loop form. But then once the loop forms and we've established a new baseline of Bitcoin, then as we move back up at the same price, the risk is lower than it was a few years ago at that speculative bubble. So this is basically you build off of it and you continue moving up, you come back down, form the loop again, and then we've obviously started going back up. And this probably will take several years to get back up to a new paradigm shift, and I imagine it'll go up to this point, somewhere in this point, and then we'll ultimately retrace, likely back down to $30,000 or $50,000, and then repeat the whole process over again. And then lastly, I just wanted to show this primary logarithmic regression band that I've shown people. It's fit to non-bubble data. So it essentially just shows you a really, the times, historically speaking, that a good time to get into Bitcoin, and we even came down to the lower part of this band here. Everyone told me, all right, the logarithmic regression model is going to break, but fortunately, it just bounced straight back up. We went to the center line here. Right now, it doesn't always work out this way, but right now the center line more or less corresponds to the 20-week moving average, and you can see we've popped above it. If we were to go to the top of the band, I think it would correspond to around $10,000 to $11,000, somewhere in that range, maybe $10,500 to $11,500. So that's I think where the top of the band currently is. So again, if you guys like the content, I would appreciate it if you subscribe to the channel. If you want to talk about this stuff and want to dive into the risk metric and discuss things about it, then check out the Telegram channel here, which you can find a link to as well in the description below. And if you want to get access to the premium content, I do put out a weekly newsletter every week with risk analysis, not only on Bitcoin, but Ethereum, Cardano, a few other coins. We look at various valuation insights, whether something is undervalued or whether the total cryptocurrency market cap as a whole is either undervalued or overvalued. We also have logarithmic regression curves that we use to help determine where we are in a market cycle. You'll get access to a private Telegram chat room and Google Sheets access to analysis on all these different things that I've talked about. That way you can look at them yourselves, you can export them to something that you would rather use. So this is $50 a month, and this is what I think most people should sign up for. Alternatively, if you want, say, one-on-one correspondence with me, where you can talk to me on the phone or something, then you would sign up for this one. But this one, that's the reason it's more expensive, because it ends up being a lot of one-on-one time. So check this out. And again, as I mentioned, you can also go to intothecryptoverse.com if you would prefer to say pay with crypto. If you do want to pay with crypto to get access to all this stuff, then you will need to either pay for 6 or 12 months, just because it's manual. It's a little bit more of a hassle to set up. But the benefit by paying in crypto, in the spirit of crypto, is you get a discount. So if you pay for, say, 12 months up front, then you get more, I think it's a little more than 10% off. So anyways, I hope you guys enjoyed the show. Again, the risk level of Bitcoin at the present time is around 0.39. So if you see the price heading up to over $9,300, $9,400, then we definitely entered that new risk regime. So please subscribe to the channel, and I will see you guys next time.